Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. I've had several people just write me either on the site or on YouTube, and they just say, get Charles Nenner, get Nenner. I mean, Charles Nenner, of course, is the world-renowned geopolitical and financial cycle man. He's a financial expert, and I'm just going to bring him on. Charles Nenner of Charles Nenner Research Center and charlesnenner.com. Charles, thanks for joining us today on USAWatchdog.com with this turbulent market that we're seeing right now.
Well, I think it's important to go over what's going on.
Well, you called me to be on, and I was like, wee. So people have been asking if you to be on. The markets have been, to the normal person, me, have been just crazy. I mean, we've seen 1,000 points in the negative territory, 1,000 points in the positive territory. Or, we've had the 1,000-point, close down days, and the next day we're up 500 or 600 points. What's going on, Charles Nenner?
Well, I don't know where to start. I think for years we talked about that our cycle low was in February, March 2009, and it should go up till the end of the last quarter of 2017. It took a couple of few weeks, and here we go. So there's nothing new. I just don't understand how people are always surprised by what's going on, because every market top and every market bottom, we explain months ahead the level and the time it's gonna happen. But they get totally confused by the media, and I just want to come up with one important thing. Last Sunday, for instance, I was listening to all these talk shows about the market on television, and every analyst says, you know what, the economy looks good, the market should go up because unemployment is low. Now, according to what I remembered, when employment is low, it's the end of a bull market. So what I did is, and people can request that chart, last Sunday I published that every time the unemployment is around 4.1, 4.2, that was 1973 and 87 and 90 and 207 and go on and on and on. And now also you have a market crash. And I find it amazing that people can come on television and continue to say things are totally wrong. Factual, you can just prove it's wrong. Now, if you have a doctor that says things that are totally wrong and people get sick or die, I guess he gets in trouble. But in these financial markets, people can continue to say anything that's wrong, and you can prove them wrong, and the next week they come back and say the same nonsense. So I understand why the smaller investor and also the large investor is always on the wrong side of the market.
So you are calling the market top right here and now. We've already had it. Have we gone over the top? Have we hit the top? Are we heading into a bear market right now?
Well, the cycles work like this. The cycles show a market top. Now, it doesn't always have to come down immediately. It means that the market will not go higher. I don't think we'll go back to the highs one more time, because the quarterly cycle, and that's a very long-term cycle, did top by the end of last year. Now, I also want to put in a caveat against all these stories that we're at 10% correction. I mean, somebody came up with a 10%. It's not based on anything, and people will just buy. And I hear stories that they still calculate how much the market is still up, like 1% for the year, and it's not that bad. So you have to look at the facts. Now, the facts is that we're totally out of stocks. Maybe, I'm in a couple of shows, I don't remember. Didn't we say a couple of months ago that we want to go long the VIX when the cycle low is there?
I don't remember that. I know that you said that we were going to be coming to the end of a bull market. And here's what you said. You said, if you're not positioned correctly, you could lose everything.
Right.
So this is not going to be just a 10% market correction is what you're saying. This is going to be, what's coming at us is big.
Well, it's very big, but market tops take time. So I don't think that it's going to go down immediately. There's a very good level of 25.50 on the S&P. I think we could bounce from there, but it's all small stuff. And people should really watch our 4 times market research to know what's going to happen every other day, because it's too complicated to explain it. What I can explain is that all these moves, as I'm going to show Sunday on my research, do exactly what they have to do and hold exactly and bounce exactly off of Fibonacci numbers. So it always comes down to the same situation. You believe everything happens at random, then nobody knows anything. If you believe it's not at random, go and study the underlying laws of the financial markets, and you'll be surprised how easy it is.
And you're saying, well, listen, Charles Nenner, brain surgery is easy if you know what you're doing, and you know what you're doing. So, I mean,
Well,
you make it sound
first you have to believe that you can find something.
okay.
If you anything can happen tomorrow, you're not looking for any laws of nature in the financial market. So first you have to be comfortable with the fact is there's no free choice. The billions of people in there, and they equalize free choice out, and then you want to know what's going to happen.
And you're saying, just so I get this right for our readers, you're saying it could bounce around up here in this area, but we're not going to see new higher highs at this point. We're going to the trend is for lower lows, not higher highs. Is that, am I getting that right?
We should have hit a major low in 2020.
Oh, so we're going to be on a big sled ride down to 2020. Is that what you're saying?
Yes, and especially today, if the markets close a little bit lower, then the weekly cycles will also show breakdown. So then it becomes more serious. I think I don't even know how to explain it. I talk to people. I have no idea how they invest. They think that if they know something is going to happen, let me say the tax treaty of Trump that we knew about half a year ago, and the market anticipated. They think once the treaty is done, then the market goes up. It doesn't work like that because the news is only in there for once. So I always tell investors, if you know something so nobody knows, then there's something new. But if they know it, now, for instance, I'm still sticking with my deflation scenario, and I'm probably the only one again. I think crude oil is coming down. We have a sales nickel, natural gas is coming down. I look at the metals. I look at everything. So I'm absolutely not surprised that people say there's inflation, because the so-called people who know it are maybe 30 years in the market, and the only thing they know is about inflation, inflation, inflation. And even Yellen says, I don't know where there's no inflation. Well, Mrs. Yellen, you should study the last 200 years of inflation cycles, and then you're going against the deflation cycle, and the Fed can do whatever they want, but you're not going to get any inflation.
So let me make sure I get this right. So right now you're out of the stock market. You're done. You're out. You're sold out. Is that correct?
Yes, since last year we're totally out of the market.
Okay, and then deflation. So you're saying that oil, copper, gold, silver. Are you saying all that stuff is on its way down for now?
Well, for now, we believe that there's a major buying opportunity in gold and silver by the middle of the year. Now, again, I tell it often, that could also be deflation scenario, because 50% of the bull markets in gold are inflation periods and 50% are in deflation periods. So it doesn't contradict the deflation scenario.
So you are a big buyer. So where's your money going? Is it going into tangible assets? Is it going into gold and silver? Is that where it's going?
No, what we're surprised is that soon is going into the bond market again.
So what about all this talk about people saying, and you're so contrarian, I love this. What about all this talk about people saying that the bond market is in a bubble? I mean, they were just out with one of the big investors was out saying that a lot of big investors are saying the bond market's in a bubble, that rates are going to go up and that it's going to crash. And you say?
I say the opposite. We went out of the 30-year when it was around 173. Now we're trading 143. That is a huge thing, 40 points. And now everybody says, interest rates go up, bonds will go lower. And now we say we're covering shorts. It's always the other way around, because people believe that the trend will continue. They never get the turn of the trend. So now finally they understand interest rates will go higher, which we knew already a year and a half ago. And now it's almost over.
So interest rates going higher, that move is almost over.
Yes.
And so you're full on you're moving out of the stock market and you are moving into the bond market. Now, some people say, wow, that's so risky. We think rates are going to skyrocket. But you say, no, that move is over.
Well, people could not explain to me. I think we talked about it before, how expensive the stock market is. And on top of it, that the cycle stopped, and nobody could explain to me why they should be along the stock market. So I don't think they know what the whole thing is going about, because, markets anticipate from what happens in 1 year. So if somebody can show me what happens in a year from now, that's how we invest. Now we have the cycle, so we know what the situation is in 1 year. But to listen to the news of today or tomorrow doesn't tell you what's going to happen next year. And this goes on I'm 30 years in the market, and this nonsense goes on and on and on. Even when I was at Goldman Sachs, I tell you, I could say that bonds go down today, and then the big traders and hedge funds says, okay, but we're going to wait for the number of today because it's too dangerous. I said, but then you're too late. That's not how it works. The number of today has nothing to do with what the bond market's going to do. But I have been saying this and teaching this for years and years and years. I cannot get it across. So if people will tell me why interest rates go up and nobody knew that till now, I mean, the bonds have gone down from 173 to 143. So now tell me how low they have to go more in order for you to be satisfied interest rates go up. Now you wake up, now it's too late.
I want to get back to this gold thing, which I want you to explain people this, because a lot of people are under the impression that gold goes up in inflation and it goes down in deflation. And you're saying, no, about 50-50. Deflation, it works good in real deflation. It works good in inflation. Explain to people what's going on in gold and why they should buy it.
Well, let me explain to you. If the market goes down and people sell out, and if they don't trust the bond market, they sell out. Now, if you look at the home builders, which have been sending out, stocks already down 20-25%, Toll Brothers, Lennar. Now, the same thing I said in 2006, it says the insiders that are building houses, they know what's coming. So they have their stock. So if the stock is down 20-25%, you can bet that the housing prices will follow. So if the housing price also go down, where do you want to put your money? If we get a crisis in the financial system, you buy gold.
And are you forecasting a financial crisis? I mean, what you said before, and I just stuck with me. You said and this just stuck with me, and I don't know why it stuck with me so hard. You just said, listen, if you're not positioned correctly, you could lose everything you have. Could you now explain that? Because it looks like we're on the doorstep of that. It looks like we're going to have a 3-year bear market into, 2-year anyway, a 2-year bear market, well, 18, 19, 20, 3-year bear market into 2020. Could you explain what you meant and what that means now, laying in front of us, that if you're not positioned correctly, you could lose everything you have?
Well, as you remember, for years we've been saying that we're getting in a period when we could have a major war. And also for years I'm saying the next bear market goes down to Dow 5,000. So if you're in stocks, I call that you could lose everything when the Dow goes to 5,000. Now, the problem was...
And you think it's going to 5,000?
That's the price target already I had for a couple of years.
Okay.
And the bond market is terrible because maybe we talked about it. People at least buy bonds, don't go in bond funds because you always get back your capital if you own the bonds. But if you're in bond fund and the bonds market goes down, you will never get back your money. So more people are in bonds than in stocks. So also there they have a big loss. Not even talking about Bitcoins and all this nonsense. Again, I have no idea. I never hear any research why people invest, how they invest. It's totally beyond me. So we just continue what we do. The interesting thing is, I wrote that up. I have three investors that are with me for 25 years. And every time just before the crash, but really just before the crash, a month or two before the crash, they stopped taking the research because they can't handle it anymore. The media says buy, 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 and then it says sell, sell, sell. And then after the crash, they come back. And it's all so I said 2 months ago, oh, they left. And oh, behold, yesterday they came back.
Well, to explain the gold and explain the gold trade. I don't think explain the gold trade. Why are you telling people to buy gold, and where is gold going?
Well, first of all, I buy gold because the cycle is bottoming the middle of the year, and I think gold is going, that we have already for a long time, to 2,500 at least. And again, you buy gold because nothing else will keep its value. Again, the stocks can go down, the bond market you're stuck with some losses, the housing market can go down or will go down based on how the builder stocks are doing. The financial system can scare you. So what is left? Buy gold. But that's just the reason I come up, because people always ask why, but I don't deal why. I just go according to the research. And years later, we know what. I mean, could be a war. I don't know what's going to happen.
How long would you be a holder? This is not a short-term move, then, what you're talking about buying gold. This is a pretty.
No.
Okay. So explain how long are you thinking about holding gold? How long do you think this move is going to last? This is not just a few months.
No, to tell you honestly, I didn't calculate that. I think a year or a year and a half or so.
At least a year and a half. Then I want to get into the dollar then, because you can't talk about gold going to 2,500 at least, as you say, and the U.S. dollar. You know, your research, I get it. You send it to me, your email blast. Your research, you call the 103 the top of the dollar. I've been talking about that. It's down roughly 10% since the beginning of 2017. So now we fast forward to today. It's around 90 or 89 something.
It's on 50% even.
So you think? Well, so where do you think the dollar's going?
Well, we were long the currencies, the euro, and we hit our price targets. The euro, Australian dollar, whatever, even the pound. So we sold out all the currencies, and we're looking for the projected high in the euro. Maybe here, maybe in 2 or 3 weeks. We're fine tuning it, and the same thing in the dollar. So you asked me the connection, I won't give it to you, but I think soon the dollar will reverse up. So you will say, how can gold go up? And I will tell you, I don't know. The only thing is that we can do the work, and we closed out a short position on the dollar, and we're just waiting for a buy signal based on levels and based on, in a couple of weeks, the cycle bottoms, and we have a long-term cycle going up for the dollar.
When's the long-term cycle going to go up for the dollar? So the dollar's not going to go down. The dollar's not going to crash. Is that what you're saying?
No, it could even go to a new high.
Oh, so you think we're in the low of the dollar right now?
Right. A matter of a very small percentage, and a matter of a couple of weeks.
Oh, that's very unusual. Is that because of the Trump economy, the tax cuts, what is that? I mean, Moody's. I mean, you're saying that the dollar's going to go higher, and people will want to explain this. And I'm not challenging you because you're way smarter than me. I'm just telling you about the news. Moody's is threatening to downgrade U.S. debt because of this, gonzo budget where we're going to spend another 10 or 13 or something like percent. We're exploding the budget and the deficits. Moody's is threatening a downgrade of the U.S. credit, and you're saying dollar's going to go higher. Could you explain that oxymoron, that what is going on with that news report? Because people are scratching their heads on this. Go ahead.
I will say something very simple, which everybody knows: sell the rumor and buy the fact. The question, the thing is it in the price or not? Now I see all the media trying to figure out why the market came down. Well, the market came down because the cycle topped. The same thing happened in '87. Why did the market come down? We still don't have an explanation. So forget about the explanation. I really don't know. And I don't know why the dollar is going up. Maybe the insiders knew that we could have a downgrade, and that's why the dollar sold up, because like we say, markets anticipate what happens a year later. So if they anticipated this now, if it's going to be downgraded, it says, okay, the bad news is out, and we're going to buy the dollar again because nothing bad is going to happen.
You're saying that the dollar and gold, at least for a year or 2 years or something, they're going to go up in tandem.
You're right.
That's a wild. Usually it's the teeter-totter. They usually say it's the dollar down, gold up. It's the opposite. But you're saying they're going to both go up in the same time.
Right. Don't ask me why. I mean, I look at my cycles, I look at my levels, and we just do the work. And I really don't understand, and I don't try to make interpretations why these things are supposed to happen. Let me give you one idea. If I'm right about the war coming, and is the war coming, is it possible that people anyway go and buy dollars and buy gold?
Well, let's talk about that. You said that the war cycle is turning up into a war cycle. You say if you look at the last war cycle and you combined World War I and World War II, is it really the same cycle? Because really what happened in World War I, paved the way for World War II. You're saying World War I and World War II was basically the same big ass war. So now we're entering a new war cycle. Where is war going to break out? Who's going to be who versus who? Where's the war going to break out? Who's going to be versus who?
Well, we talked a long time ago, years ago, about this subject, and it says probably it's not going to be in the Middle East because everybody knows this. I still think it's going to be in the Chinese Sea, fights over the islands and Japan. So that's what I thought. But maybe it's also North Korea because that's also the same neighborhood. I really don't know exactly because I'm not an expert in wars. I just said based on a cycle, things have to get worse.
And this is going to be, you were saying that this is going to be a small war. This is going to be a big war.
Going to be a big war. But again, it has to start now within 1 or 2 years. I mean, we have more wars than usual. It's the same thing when the market is stopping. Some stocks already go down before the big one crashes. So some wars break out already. I mean, a lot of countries around Syria, Iran, Korea, I mean, everybody is actually already in a kind of a war situation, but it's like stocks selling off until the whole index goes down. So at a certain moment, something bigger is going to happen, but it has to happen in a couple of years if the cycle is correct.
And you think has the cycle ever been wrong?
Well, no, but it's always possible. But if you don't trust what happened in the past, you have no idea what happens in the future. So this is what we work with. We don't have anything better.
So is the body count going to be bigger for this war than World War One and World War II combined?
Yeah, it must be, because based on the work we do, there are going to be more casualties, and also I guess the advances there are in military will lead to more casualties. But this is speculation. It's not my expertise.
You said that. Let's go back to your expertise then. But thanks for that war cycle thing. Then that may explain gold and the dollar. I mean, if
Could be.
If big money thinks, wow, we could have a war, well, maybe they need to be in the U.S. dollar. Maybe they need to be in gold. Donald Trump. I want to get into this. He in his tax cut provision, he opened up Anwar. He opened up all this drilling. I've got there's all kinds of reports about the oil industry exploding. I've got people just people writing me saying they're coming out of retirement, they're going back to work, that the rigs are being set up, that they're going. Donald Trump apparently, and of course he didn't give this away, but he did call it a national security interest. Us being energy independent. It looks like he's trying to turn us into the exporting ability of Saudi Arabia. That we're going to be the next Saudi Arabia in terms of energy exports. What do you think about that?
Well, we were very negative on gold stocks. Look what happened to Exxon. I just happened to look what is it down, $20, $25, from 90 to 70. Schlumberger came down. All these stocks. And if the oil price goes down, now you ask me something again that I'm not an expert in. I don't know how low it will go until it's not worthwhile. So I don't know if the crude oil price really comes down like it looks, looking at the cycles. If it's worthwhile to expand this business.
So you don't think that they are going to be expanding business? Is that what you're saying?
Well, listen, we come from two different directions. These are questions that don't help me make money for the people. What makes me make money for the people is, does crude go down? Does Exxon go down? Until when and which level? So even if I have an opinion on that, it's philosophy. It's my work to make money for people and make sure they don't lose it.
But you definitely think oil is on its way down.
Yeah, we short oil from 64.5. The first cycle low is in a week. We'll see a bounce, but the longer term cycle is down longer.
Oh, this is fascinating. I'm sorry I have all these questions. And I got a list
also,
of questions.
Also, natural gas looks terrible.
Okay, all right, good. I've got a big bunch of questions for you because I was so excited to have you on. You said that market valuations, and I want you to explain this to people. I don't think it's pretty easy to explain, but you said in your research market valuations are higher than 1929. That sounds bad. Explain, please.
Well, you have certain methods that we calculate what the value really is of stocks, and what you do is you look at the replacement value. We don't calculate it. The Federal Reserve calculates what the replacement value is of the stock market. And if you plot that out on charts, you see that you got 9029 and you got something in 67, which was lower. You got 2000. 2000 was already higher than 9029. And this is even a little bit higher than the level of 2000. Now, if you want to be more conservative, you look at the price to book value, the price earnings, the price to cash value. You add them all up. It's not also Professor Sheila said that it's ridiculously overvalued. I'm not the only one. I just use a bit different method. I mean, he could use more method that he doesn't show when he's on television. So I find it very important what he says. And if you have no idea, now the other thing is that I showed a couple of weeks ago is, that they say the market goes up like 7-8% yearly, right?
Yes.
Now what they do is they look at the market starting 1817, 1880. 1900, and then they draw a line with an angle of 7-8%, And what you see is that the market is like 40% above that line. So if you want to go back to the average of 7%, you have to go down 40, 50% below the line. So people who say in media, but the market will still go up 7, 8%, I really don't understand. I wish I could go there and challenge them because it's totally wrong. And again, it hurts me to see how people lose because they continue to be on television and say that are factual, totally wrong.
And this is a stunning call. I mean, I know that I've listened to these people just time to buy. That's all they say, only 10%. But you're saying we're gonna hit 5,000 land on the Dow. We're
Right,
going there.
Yeah, but a couple of years I have to be careful because once was on Bloomberg television said the same thing, and then they wrote it wrongly. Says it's going this year to 5,000. That's not what I said, and then say, oh, it's not correct. No, I said 5,000 in another 4 years.
Yeah, in the long term, in another 4 years. That's right. That's right. Charles Nenner, you're going to be starting. Of course, you have your website, charlesnenner.com, the Charles Nenner Research Center. But you're going to start giving away your research for free on Twitter. I mean, this is perfect. You're so staccato and so sharp witted that's going to be perfect. Tell me about you're going to be tweeting out on Twitter, and how do I sign up?
Well, first of all, it's not giving away the research. This is intraday. So if you got crazy moves on the S&P, we can use hourly cycles. We can say, listen, for the next 2-3 hours, it's going up and it's going to hit this level. And then tomorrow from 9 o'clock, it goes down again. We just try to help out people. We're not going to charge it for it. It's a good question. How do you, I was just decided, I don't even know my Twitter account, but if they send an email to our research and ask them how do you find me on Twitter, I'm a very theoretical person, not so practical about these things. Then the office will answer them how to get there.
And I'm sure you're going to end up putting it on your charlesnenner.com, Charles, Nenner, charlesnenner.com. I'm sure they'll put it on there too if you start doing this. I think that's fabulous.
It's good to remind me. That's a good idea. Yeah.
Oh, okay, well, fine. Well, I don't want to tell you how to run your business because you're way smarter than I am.
No, we're not so practical. Let's say that's a good idea.
Okay, good. Well, listen, thank you for coming on and explaining what's coming down. You said that people are going to, if you get a $5,000 Dow and people are holding for the long term, I guess that's what you mean by you could lose everything. You could go from 28,000 or 27,000 or 23,000, whatever it is right now, and go down to 5,000. That's like losing just about everything, isn't it?
Yeah, but don't think it's the end of the world because what was the low in 2009? I think that was 7,000, and there was still a world functioning. I mean, there was a financial crisis, but the whole world continued. I remember I was having a firm in the financial center in New York in '87 after the crash, and I looked when the market was closed, I looked outside and everything seemed to be normal. I was surprised that the whole world still exists. So don't think the world is going under.
And one last question. I just want to get your are we better off under President Trump doing what he's doing? Are we better off with him? I mean, it looks like he's bringing money back. Jobs are being created. Unemployment's low. Of course, that's a tip off that the cycle's stopping. But are we better off with Donald Trump than what we had before?
Well, to tell you, if you leave all the nonsense out that the media say and just look at what he does, I think we're doing very well.
Okay. All right. I'll take that as a yes. Charles Nenner, again, the website, charlesnenner.com. Your tweets are going to be for free. That's going to be coming up, so you ought to be able to get on. You also can sign up. Don't you get a couple of weeks free when you sign up, or you get a week's free trial or something like that? Don't you get that?
It's more than that. I think it's 2 months or so.
Okay, there's a free trial so people can get your fabulous, detailed research in every market under the sun, and that's fantastic. I read it all the time. Charles Nenner, thank you for joining us today on USAWatchdog.com.
Be well, and we'll talk when the next crisis occurs.
Which is going to probably be pretty soon. Yes, thank you so much for being on, Charles Nenner.
Bye.